So let's look at some tips for consistent trading results. You now understand what moves the market. You now understand that it's either, interest rates, or it's going to be a product of supply and demand. That's it. So when you understand these concepts about these markets, you no longer need to try and decipher what is ever happening in the market. You already will know. You see, that's how come I avoid reading anything stock market related. I may decide to take a peek. My sister may call me and, we may have a chat about it, but it does not help me or give me any type of advantage. It actually can be detrimental in my trading. So some instruments will lend themselves to news. In some instruments, you have to keep your hand on the pulse of the news. If you're trading commodity futures, for example, and you're trading oil, you need to keep yourself abreast of what's happening at OPEC. If you're trading, for example, sugar, you need to understand that the NAFTA, the North American Free Trade Act that took effect between our country and Mexico, that can impact your sugar prices. You need to stay on top of that. So yeah, there are some instruments that lend themselves real well to monitoring of news. Stocks are not those. Stocks are not those. And so if you want to learn how to be a successful trader, and most importantly for directional trading, because if we're hedged, we don't care. But if we're directional, you have to filter out what's known as the noise of the market. Everybody has an opinion. And you have some people now saying, we're going to drop like a rock. And then you have some people say, we're going to go up from here. And everybody has a prognostication and a prediction. And don't be so quick to act on this. Remember, we trade options. So it's not just a matter of getting the timing right. As a matter of fact, it's more important to get the price right. You see, I believe what Warren Buffett says. He said, it's not about the timing of the market, it's about the price of the market. He says, I would always prefer to forego buying a mediocre stock because it's cheap. I would prefer to pay fair value for a company because it's strong. And that's what I'm saying. We are option traders. It's not just a matter of going in at any old strike price at any old time on the option. We have to be specific in our price and our ability to understand that there are some circumstances that are going to lend themselves better to be in a trade over a few weeks, a few days, a few months. What are the minefields? And this is why we're having these 8 treasures. They truly are treasures. Everything that you need to know about the market, I hope that I'm proving to you now, you are going to be able to learn. Now, at the end of the day, and I think I'm going to coin this phrase, I'm going to copyright it, patent it, whatever, price is really the only true indicator of whatever is happening in the market. Only price. And that is true. It rang true 20-something years ago. It is still true today. And remember something interesting. One person's results may not initially be your results. So if somebody says, well, I did, for example, the cash generating strategy, which we have shared at our retreats. And I know that, some students make it very highly profitable, have been doing it for many years. And then you try and it's not for you. Maybe then it's not for some people are better suited for directional trading. I remember how I said that weekly head for me, I'm better suited trading in exchange traded fund. We'll learn that one on Thursday. But I had a student, I said, I don't go after stocks. I met a student that makes all their money trading weekly hedge with stocks. So you can see not everybody's results are going to be initially your results. You will get to that point where you are going to find your way. So the best thing to do is to master one market, one strategy before embracing another. And I know people say, I don't get it. 20%, 10% on this trade was only 20 cents. And I get it. On 5 contracts, that's $100. But I can tell you, when you make 100, you can make 200. When you can take 1,000, you can make 2,000. When you can take 2,000, you can make 4. So don't initially go by the value of the profit. Realize how magnified that profit is when the number of option contracts increase. And that's what you're trying to do. Get into a consistent trading ritual that yields small, consistent results with small contracts until you can start getting to the point where you're trading with larger contracts, changing nothing. You have to know that 20 cents on 5 contracts is $100, but 20 cents, on 10 contracts, is a whole different ballgame. I'm not sure I'm saying my numbers right, but you get my drift, okay?